I just want to look briefly at the ferrochrome industry. Whenever I am asked to present on an outlook for the ferrochrome industry, I normally begin with an analysis of the health of the global economy. The fortunes of the chrome and ferrochrome industries are dependent on the demand for stainless steel intensive goods. The consumption of these goods increases amid strong economic growth, while in recessionary times demand declines. The financial crisis is an extreme example of the dependency on the chrome industry on the global economy, as in 2009 the average price of European ferrochrome dipped by about 60% year on year. Unfortunately, time does not permit us to dwell into the economic developments, and instead I have divided the section into discussion on key trends in the stainless steel and ferrochrome markets, and then I present Core Consultants' outlook for the ferrochrome prices. I do, however, invite you to contact me directly should you require a more thorough analysis of the industry. Of the chrome ore that is produced, 95% is metallurgical. Of the metallurgical grade ore, production of 36% is in South Africa, followed by 24% originating in Eastern Europe. About 80% of this ore is consumed by the stainless steel industry. Thus, as I mentioned, the fortunes of the chrome market are inextricably linked to the fortunes of the stainless steel industry. High carbon ferrochrome production fell by 17% in the third quarter. If we consider the main producing regions, South African production fell 15% compared to the second quarter. This was led by a combination of winter electricity tariffs, slower demand and lower benchmark prices, which resulted in many South African producers electing to undergo maintenance. The results of our surveys of South African producers indicated in the third quarter producers were operating capacities of between 55 and 65%, some even as low as 50%. In speaking to South African smelters, most indicated to us that they were now operating at 100% Eskom-constrained capacity, and that was over the fourth quarter. Orders from Japan and South Korea improved over this time. The orders from China remain sporadic even now. We are thus expecting that the total output from the African region will be just under 3.8 million tons in 2010. Eastern Europe is expected to show an improvement of 29% in the fourth quarter, but this is off a low base, as in the third quarter, adverse weather conditions in Russia, which led to postponements in scheduled maintenance of various national grids. This resulted in constrained electricity supply in September, which in turn led to lower production rates. Asia was the only region that managed to increase production growth in the third quarter, raising output by 3%. However, Chinese exports fell 6% over this period, owing to lower Asian demand. The largest impact was felt by Japan, who decreased their Chinese imports by 10,000 tons over this period, owing to a weaker automotive market. South Korea, in contrast, however, have raised its share of imported Chinese ferrochrome by 72% and is now importing on a par with Japan, which is a testimony to the country's strong automotive growth. Turning our attention to the stainless steel market, Chinese demand, particularly for the 400 series, is improving after inventory levels peaked in July. We consider the Wuxi market as a proxy for Chinese stainless steel inventory levels. After climbing to a 228,300 peak at the start of the fourth quarter, inventory levels have begun to contract and are now 34% below its peak in June. Though this decline is a positive indication of increasing demand, the stock levels remain 18,000 tons higher than the 2009 zenith. If not reduced, this is likely to cause significant price volatility as production improves over this quarter. Overall, the prospects for the stainless steel market are sound, and we are anticipating growth in demand to improve by 13% this year, led by Asia. Our medium-term outlook for the stainless steel demand is still positive, and we expect this to be led by the automotive industry. Vehicle production in China is expected to reach 16 million units by 2012, representing a compound annual growth rate of 17% since 2009. General Motors has established a joint venture with Shanghai Automotive Industry, corroborated our view in a recent Outlook presentation where they indicated that light vehicle production will reach 11 million units by the end of 2010 and 16 million units by the end of 2014. We, however, caution that demand in China is government-led and changes to incentive schemes or government fiscal policies choosing to cool the economy could adversely affect our estimates. Our most recent surveys of stainless steel traders have indicated that orders in China are increasing, so we anticipate strong consumption growth from the region over the next 2 quarters.
In the US, end-user demand has picked up, and our discussions with stainless steel mills indicate that much of the demand is true demand, rather than from restocking from distributors and end users. According to Ward statistics, there has been an improvement in new vehicle registrations of 5% in the 4th quarter, translating to an 80% capacity utilization among car manufacturers. This compared to 68% capacity utilization in the 3rd quarter. Thus, the U.S. automotive industry is showing signs of improvement. Overall, we are bullish on the prospect of the U.S. market and are forecasting an 11% year-on-year gain from the 2009 levels. We are more conservative on the prospects for the European market. New vehicle sales declined by 3% in July and by the same amount in August. Overall, the market has been extremely subdued, with few significant purchases having been reported. Purchases started to stabilize in the second half of 2010, but the region is still grappling with job creation, and as such, we do not expect stellar results from the sector. There are, however, pockets of Europe that are increasing the utilization rates. For instance, Germany's stainless steel mills have reported higher utilization rates, driven by increased demand from BRIC countries for luxury vehicles. Overall, we anticipate that Europe's stainless steel consumption will remain divided, with wealthier countries such as France and Germany improving their demand for stainless steel goods, while consumption among poorer club-med nations will remain lackluster. To meet this demand, we estimate forecast of ISSF figures that stainless steel production will grow 12% in 2011, with Asia accounting for 59% of total production. China alone should produce close to 17 million tons of stainless steel this year. Tagang Stainless Steel, China's top stainless steel mill, has increased production by 30% in January compared to November. Additionally, while there is still some effect from the 29 emission reduction target, much of production among countries' major mills have returned to normal production levels. In the south, Guangzhou Langzhou Stainless Steel has also indicated that they would return to normal production of 130,000 tons per month by the beginning of February, while Bayer Steel is expecting production to recover to around 120,000 tons per month from January following its recent maintenance. Europe remains the second largest contributor to stainless steel production. While the region is still suffering from the effects of the banking crisis, we anticipate that production levels will be maintained at around 7.6 million tons. For the rest of Asia, it is also expected to exhibit strong growth in order to support the growing export industry, particularly among ASEAN nations. We anticipate growth from this region to show an improvement of 5%, bringing the total production levels to just shy of 9 million tons. Based on our projections of stainless steel production, we estimate that the ferrochrome requirement for this year will be around 8.5 million tons. This represents an increase of roughly 45% from 2009 levels. Roughly 5 million tons are expected to be consumed by Asia. Having considered the consumption requirement, we need to consider the supply side of the ferrochrome market. It is well documented that plans to increase capacity were thwarted during the global financial crisis. Some 4.8 million tons worth of production capacity was put on hold. While projects in Finland, ENRC and India are still anticipated to come on stream, roughly 3.6 million tons of this capacity are South African projects. Owing to power shortages in the country, which resulted in Eskom having to restrict capacity utilization to 90%, we do not anticipate significant new projects to come on stream before 2015. Rather, increased output is expected to come from improvements in capacity utilization levels. Chinese energy savings and emission reduction policies are being carried out in the country in 2010 have caused uncertainty with respect to the production of ferrochrome. Ferroalloy plants in the provinces of Hebei and Inner Mongolia were forced to halt production. However, production has now resumed to normal levels, but there is still the risk that government could implement similar measures at any time. Overall, we anticipate moderate growth over the medium term, though the market is expected to remain adequately supplied this year. On average, we estimate that the global production costs have risen 11%, with the majority of regions expecting inflationary pressure. In particular, we estimate that South African costs are fast broaching $1 per pound. Energy costs have increased 24% since January last year. Additionally, a conference hosted in August last year for South African producers, it came out that it was possible that carbon taxes could be implemented as soon as the beginning of March 2011, which could start off at R100 per tonne of carbon dioxide and ramp up to as much as $750 per tonne per unit carbon dioxide emitted. This would further exacerbate South African costs. South Africa is not alone in the increase of electricity tariffs. Chinese energy costs have also hiked by around 19% since the beginning of 2010. Additionally, we understand that more than 40% of the power producers in China operated at a loss in 2010, so we expect tariff increases for this year are unavoidable. Indications from the European coke traders are that prices are fetching above $450 per tonne FOB in Europe and $500 per tonne FOB in China. It is expected to stay high for the next few months, owing to a shortage of coal, which is further exacerbated by the Australian floods. Meanwhile, the strong rand and rising ore costs should provide a higher price floor over the medium to long term. Overall, we are positive on the price outlook of ferrochrome sector for 2011. Benchmark and contract price settlements are slightly lower, with Japan settling at 1.33 cents per pound and Europe at 1.25 cents per pound. However, in speaking to stainless steel producers, these lower settlements were due to favorable prices in China and subsequent increased Chinese stainless steel material on the European market. In the US, demand for high-carbon ferrochrome has improved, and prices now stand between $1.3 and $1.4 per pound. This is partly due to the exit of the DLA Strategic Metals, which sold material with high carbon and low carbon content at discounted prices. Since the exit, material has begun to trade at a premium. We therefore expect more material to enter the US market. Eticom has already indicated that they would ship between 30 to 50,000 tons to the States this year. The exit of the DLA has also created a disparity between the US and European markets, and we expect that the exports to the US will increase. Chinese prices are expected to improve from the present 9,000 renminbi per tonne since the relaxation of the savings and emission reduction policy quotas. Stainless steel capacity utilization levels are recovering faster than the ferrochrome production levels. In the short term, we expect steady improvements in benchmark prices and European benchmark prices to reach 1.33 cents per pound by the fourth quarter and average 1.28 per pound over the year. In the long term, China's 12th five-year plan supports consolidation within the metals market, which could see Chinese mills adopting a benchmark system. Should this occur, it will supersede the European benchmark process, and we believe that the European system will fall away, leaving European mills to negotiate privately with ferrochrome producers. Adoption of the system will increase transparency in the Chinese market, and we believe limit the discounting of ferrochrome, resulting in a more stable global market. In summary, rising costs of raw materials and energy should increase the acceptable ferrochrome price floor, while the strong rand outlook is expected to lend further support for ferrochrome prices. If European mills refuse to pay higher prices, South African producers will be forced to begin limiting production. This will result in a supply deficit and higher prices. For these reasons, we expect that the long-term price will remain in the upper end of 97 to 1.01 cents per pound range.